The euro remains firm but stays in a tight range against the dollar and yen as markets are awaiting for European Central Bank's post-meeting conference today. Some information was leaked this week and so far, investors seem to be pleased with the limited details obtained. The new bond program under the framework called monetary outright transactions would involve unlimited purchases of government debt that will be sterilized, like under the S&P. Yet, the central bank would refrain from setting a public cap on yields and will target short-dated maturities of up to about 3 years. Also, the ECB could be prepared to eliminate the seniority status of bonds. That means the ECB won't have the right to be paid back first, and private investors won't be pushed down the credit pecking order. Regarding interest rates, markets are split on whether the ECB will cut the key interest rate by 25 base points to another record low of 0.5%. Meanwhile, markets are also uncertain on how the central bank would handle the deposit rate, which is usually 75 base points below the key interest rate and is currently at 0. As a vote of confidence that ECB President Draghi will deliver, Swiss franc staged a strong, sustainable rebound yesterday and is back above 1.2050 for the moment. We'd like to point out that the jump wasn't a spike like that which happened on August 6th. Also, buying seems to be much more persistent than that which happened back in late May. Indeed, yesterday's close was the highest since April. Judging from the extent of the rally, it doesn't look like it's due to rumors of the Swiss National Bank raising the floor to 1.25, in response to recent poor economic data. If that's the case, the rise should be much more violent and Swiss franc shouldn't be capped below 1.21. And, thus, we'd like to emphasize that markets seem to be quite firm that Draghi will deliver as even the sleeping Swiss franc moved. Elsewhere, the Aussie recovered mildly after data showed the unemployment rate unexpectedly declined to 5.1% in August. However, it's believed that it's a decline of the participation rate, from 65.2% to a straight 65%, that led to the unemployment rate lower. The job market has indeed contracted by 8,800 whilst July's figure was revised down to 11,700. Looking ahead, the Bank of England is likely to keep rates unchanged at 0.5% and maintain the asset purchase target at 375 billion GBP today, and thus will be a non-event. Eurozone GDP and Germany factory orders will be released in the European session. Meanwhile, automatic data processing employment change from the US will be featured along with jobless claims and ISM services. Whilst the ECB press conference is the major event, the US data could also shake the markets. Japanese yen daily outlook intraday remains neutral and consolidation from 99.18 might extend. But again, the cross is staying comfortably inside a near-term rising channel and thus, a further rally is still expected. Above 99.18 will target a 38.2% retracement of 111.43 to 94.11 at 110.72. On the downside, a break of the channel support, now at 98.00, will indicate that such a rebound has completed and will flip the bias back to the downside for a 95.71 support for confirmation. In the bigger picture, there is no clear sign of a reversal yet and the downtrend from the 2008 high of 169.96 could extend further lower to the 90 psychological level. However, as we are favoring the case that a pattern from 139.21 is a falling wedge with bullish convergence condition in weekly moving average convergence divergence. A fall from 111.43 should be the last leg in such a pattern. Hence, we'll expect strong support above 88.96 to contain a downside, form a major bottom and bring a reversal. So, focus remains on a reversal signal. Meanwhile, a break of the 101.62 resistance will be an early sign of a medium-term bottoming and will turn focus back to the 111.43 key resistance for confirmation.